recording if you at all. So basically we're going to be doing these where's that gone? Yeah, we're going to do these sessions kind of more regularly now. Why is that not going? Hang on. Share my screen. Yeah, so basically we're going to be doing these sessions more regularly now, just to kind of talk through the last week of price action, kind of markup charts, and hopefully give you all a bit of an insight into kind of how I'm looking at charts and, you know, what I'm ultimately looking for. It's a good opportunity for us to discuss any trades that have been taken and also to discuss any trades that have been missed as well. So yeah, let's get stuck in. So DXY, obviously a bit of a rangy week, as you can see. So the week opened here and it closed here. So, you know, really tight candle there on the weekly. We did have our AMD. However, the accumulation was on Tuesday. Here we had our manipulation up here. Okay, a bit of a confusing one. These ones are often confusing when it pushes down and pushes back up. And often you don't know that it's the accumulation. Sorry, you don't know it's the manipulation until obviously the distribution's happened. But we can clearly see that that was our distribution. And then, of course, we had our end of week reversal. You know, pretty clear, lovely price action. Mondays, if you're maybe noticing or not noticing, are, you know, they're very different now since the contract change. So we get some nice expansion moves. So I'm noticing that the accumulation can often happen now on kind of a Monday or a Tuesday, which hasn't changed too much how we would handle this. But it does mean that ultimately, you know, we can expect that accumulation kind of Monday, Tuesday now, instead of it being pretty strict on a Monday. Obviously, it was always interchangeable, but naturally, you know, it is Mondays tend to be quite expansive now. So slight adaptation to the kind of weekly cycle. Just have to be prepared for it, really. In terms of kind of price action on DXY, I didn't have too much fun with Euro USD this week, if I'm honest. It was quite difficult to trade at times. Obviously, we had this big Monday expansion here. Not really any opportunity to get in anywhere unless you were to take a buy from the first kind of liquidity sweep that we had on the Monday was kind of at 6 p.m. where it took out these lows and then took out these highs. So a little bit late in the day for my liking personally. Again, Tuesday didn't really give us too much. We did have the Asian manipulation and we did get a bit of a pullback, but again, you know, really kind of tight range there. Then on Wednesday, we had a much better setup. So Wednesday, we had this nice push down, took out the Asia lows, took out liquidity from here to the left. And then, you know, we had a good reversal setup and a big news move. So that could have been quite a nice trade. Obviously, the opposing would have been on Euro USD. Thursday and Friday were a lot better, as you can see. We had our accumulation at Asia. We had a nice sweep up and then a really nice distribution throughout Thursday. Similar sort of story on Friday. Again, a tighter range, but the same sort of principle, sweep up. Nice kind of clearance liquidity out of this kind of internal range. So sometimes with Asia, one thing you've got to kind of be prepared for is it doesn't always sweep the highs of Asia. Same here, didn't sweep the high of Asia, but what it is doing is it's taking out internal liquidity. And I've noticed if there is a clear liquidity point in Asia, then that can often be used for you know, our liquidity. And ultimately, you know, we're not just trading off the liquidity point itself. We wait for, you know, a setup from the liquidity. So I'm not sure we actually got one. Like I said, DXY wasn't particularly clear. So you'd have had to kind of catch this kind of pullback to get into it. You know, that move there, you had an MSU setup here. So you could have got a trade potentially out of New York on DXY. And obviously the opposing for Euro USD, but not a particularly great week for the dollar. In terms of what I'm kind of expecting next, I'll go over this in the forecast tomorrow, but, you know, really for dollar, I need to see some sort of external liquidity taken. You know, we're still stuck in this same range that we were in from last week. You know, we got Tuesday there, we got Friday here. And this move here, it took liquidity to the left. So, you know, we've got some bullish price action there. We did then fail to make a new low, which often can be a, you know, a key signal for us to be wanting to reverse like that. But then we failed to make a new high. So quite dangerous conditions, I think, on the DXY at the moment. If you look at this kind of squeezing of price, Personally, I'd like to try and stay out of that until we get some key liquidity taken out. Let's jump over to Euro USD and just see whether we had anything better on Euro USD last week. So let's have a quick look. I don't think I took much on Euro USD. I can't remember. My head's a little bit foggy from all the painkillers, so apologies, guys. But let's just go over the price action. Now, strangely, similar to DXY, we had quite an expansive move on the Monday, which you can see. We had this level here that I marked out as a trap. No, I did take a trade. I'll tell you where I took a trade. I remember now. So looking at the price action here, okay, we had big bullish move, pullback, and then the bullish move. You see how it had no conviction. Took out daily level here, and then immediately rejected. So that showed me that there was weakness in the Euro USD. So I did actually take a trade. It was quite a tricky trade, and it was quite a risky trade, but it was still valid. So I took the liquidity sweep here. Okay, this was on the Tuesday. I took that liquidity sweep here. I targeted this as our trap zone. So my expectation, because we failed to make a new high here, and the new high would have, of course, been up here, and we had a really clear rejection, my expectation is that we would have this as a trap zone. So what I was then looking for is that once we cleared out that liquidity there, okay, you can see it here, is a rejection. Let's see if I can get the replay tool on. I think I actually held this one overnight. So we get here, we get the rejection. We get some nice impulsive bearish candles coming in. We then have the MSU sweep, which is there. And then we had a lovely little engulfing. So that was a really nice trade on Euro USD. I think that's the only trade I caught on Euro USD. My first target was that liquidity, okay? And I think I held a little bit on to take out the bottom of the trap as well. I can't remember my exact entry. I don't believe it was as tight as that, but the sentiment was the same. For me now, what I'm looking for ultimately whenever I take a trade, and this is kind of just a filtered, for me, a filtered trading plan. This is coming out in, I'm doing a new trading plan ultimately for the team. So this is the trading plan 2.0. So for me, what I'm ultimately looking for is I'm looking for 15-minute sweeps of liquidity. So I take my direction off the daily and the 4-hour time frame. Okay, the 4-hour we can clearly see we're in a 4-hour range here. Okay, we swept that liquidity, big impulsive move down. We've got lots of bearish daily candles as well, so that gave me clear indication. So for me, I've got all of my time frames on lock. This now, where previously you might have seen these areas as kind of a risky area to trade, if you're confident on your direction and confident that we're going to push down further, then ultimately we can mark these on as traps, because the likely outcome is that this zone is going to get taken, okay, which you can see it clearly does there. So for me then, I'm looking for a 15-minute liquidity sweep, okay, should we get one here? And we get one here. So there's a couple of ways you could have got into this. You could have gotten to this on the Tuesday London session. You could have gotten this on the end of the day on Monday. In fact, sorry, tell a lie. I knew it wasn't the right entry. I got in on this move. Just drop down. I'll show you what I got in on. Okay, yeah. So cleared out 15-minute liquidity. Beautiful ISC. Then we have multiple entries here. I think I got in something like that. And yeah, because I knew it wasn't as tight as 7. And then I held down, my first target was that Asia, and then I held down to get through. So I got a lovely 2 hour out of that. Nice, easy trading with all the time frames in line with us. And you know, that's what we're looking for. We're looking for that unity in the time frames. Most importantly, we're looking for our order flow to be lined up. So we've got daily bearish candles, we've got 4-hour bearish ranges. And then, you know, these are areas where I think traders often get caught out, okay? So you look at areas like this and you think, right, we've got a key liquidity level here. We also have a demand zone or an order block here. So what I'm looking for here, we're looking for longs. How many of you are guilty of that? How many of you have done that before, where you kind of expect a long?
Yeah.
Yeah, happens all the time, right? And more often than not, the reversal doesn't happen. Okay. And when the reversal does happen, like this, you get plenty and plenty of warning. So when a reversal happens, it's really, really clear, really, really obvious usually. It's very rare that you get these reversals that kind of, pull this really tight price action and then like really tightly kind of reverse like that. It doesn't often happen like that. It normally takes a big cash influx. And so you get these big moves like this. And what I've learned over the years of pain and losses is that actually, if you just continue trading it, even if you're at an area where you're expecting reversals from, there's nothing in this chart that indicates to me we're going to get a reversal. You've had a false breaker structure here. So if anything, you could be targeting lows, because if you had your first breaker structure, your false breaker structure, the expectation is that it is probably going to push lower. But for me, this was a simple one because I was like, right, I've got a weak move up here that hasn't closed above any significant liquidity. We've had a really clear rejection and really clear bearish input coming back into the marketplace. So for me, this is a nice and easy trade. I can trade it short. Yes, maybe it's a higher risk. Yes, maybe you don't want to be jumping into these trades all the time. But if you've got enough reason to get into it, then you can catch some really nice positions like that. So I think I got a couple of positions out of that. I think it was about 1% all in all or something like that out of the marketplace. Nice, easy trading. We clearly blow that level, and then kind of the rest was history. From there, this is where I felt that Euro USD became really, really difficult to trade. Obviously, we had news on Wednesday, so I stayed out of this. I think a couple of guys got caught out shorting this. Again, I would still suggest shorting this. So look, bearish order flow. If we just take all of this out for now, okay, and just tidy up the chart. Okay, we look at our order flow. So look at our order flow, right? This is 15-minute chart. Order flow is clearly bearish. We have a pullback here. Okay, but nothing significant breaks. We've got no, we haven't got a move like this, which clearly shows us, that we are going higher. What we've had is we've just had another 15-minute liquidity sweep. Okay, 15-minute liquidity sweep. If it wasn't for the news, that would have been another really good short entry. News wicked up, so you might have been lucky if you covered your stops well enough. But again, you've got another really good position down to the Asia low. Now, this is an area that we were expecting reversals from. But remember, it's a weekly level, right? And those weekly levels, they take multiple days. 1, 2, 3, 4. 1, 2, 3, 4. Yeah, it took 4 days to actually get the reversal signal. So, and even now we have got that reversal signal. Where are we likely to go next, guys? What's most likely to happen?
Pullback.
Yeah, pullback, right? So we've had one bullish push up. Well, we're expecting one or two things. We're expecting either a pullback into some area here or liquidity level that's then going to fuel the move higher, okay? Or we expect a pullback to take out the trap to the left. So either way, the shorts are still the best option. And again, this is where so many of us get caught out, taking out that daily liquidity. Taking a short from here is now probably a really good option. You've got a weekly level there that will act as some resistance. If you get a tight entry on Monday, that could be a really nice position to come and pull back to. Yes, your trade might be limited by the bullish influx, but if we jump up to the hourly time frame, look, we're still bearish, right? And all we've done with this move is we've just reached up into premium pricing. So there's nothing on this which indicates to me that I should be biased of bulls. That may be the case, but we don't know that until something like this happens. Okay, and we get that second breaker structure. Once we get that second breaker structure, now we can confirm bullish, and now we can assume bullish. But all this is right now, for me, is a complex pullback. Yes, it's taken out lots of liquidity, but it's taken out that liquidity and it's found resistance, and now it's potentially pulling back down. So I'm still a short bias on Euro USD ultimately, but we'll discuss that more in the forecast session tomorrow. GBP JPY. So this is where I had my real fun last week. GBP JPY, I'm doing a lot of testing with it at the moment, and I'm finding some really, really good results ultimately. So it seems to respect the 4-hour and the 15-minute liquidity really, really well. So if we look at our 4-hour liquidity, obviously we're just getting really, really clear 4-hour order flow, right? So high to low to high to low to high to low to high. Okay, and then we started the next pull down. Sorry, push down. This for me was really simple trading. So we spoke about this trend line, okay, on Tuesday, I think it was Monday, Tuesday. So the reason why I really like this trend line is because there was no manipulation within it. So when we're looking at order flow like this, we automatically assume that that is, good order flow. Actually, it doesn't take much money for that to happen. If you think about manipulation, okay, think about how manipulation works. Does it take more or less money to manipulate a low or a high? Does it take more or less money to manipulate the lows? Anybody? Hello? Hello? We lost everyone. Guys, you still there? I'll carry on with that then. So generally, just where's it gone? Okay, so generally, it takes more money to manipulate lows. The reason why is that there is resistance here, right? Okay, there's resistance in the form of buy orders. And in order for the algorithms, the institutions, the hedge funds to manipulate those lows, it takes big influxes of cash. So when that happens, it means that there's a bigger volume of orders here, because of the money that's been injected to break those lows. So these ones, when the order flow looks really clean in those classic kind of trending markets, that order flow is really easy for price to break through. And it shows that there's a lack of manipulation there, which shows that there's probably going to be less big players in the marketplace. So when I see trend lines like that, those for me are really, really key areas that I want to be seeing manipulated. Now, this trade was a little bit more difficult to get involved in. Okay, I don't enter just on risk entries. We obviously didn't have that push down and clear bearish reject kind of pullback there that we would really like to see before we get there. So I factored in the fact that we had a nice push down. We were overall bearish. We had liquidity here. We had trap zones there. And ultimately, I had enough confluent factors. So each of these then became what I would call a 0.3 liquidity. So 0.1, so 100, kind of a major liquidity for me is an external liquidity. Okay, and that for me is like 100%. Okay, that's the best kind of liquidity that I can see reactions from. Those are the sorts of liquidities that we can take risk entries off if we really want to. These kind of less impactful liquidity areas that have less money sat around them, I call them 0.3 liquidities. So when I've got 1, 2, 3.3 liquidities, that adds up for me to 100% liquidity. Okay, so it's like I'm taking the liquidity of an external level and I'm dividing it by 3. So that gives me a 0.3, that gives me a 0.3, that gives me a 0.3. I've now got enough reason for me to assume price is going short. I waited for some rejection, as you can see here, and then I just entered really, really simply on an MSU. Okay, so I waited for manipulation to come into the marketplace, bearish engulfing, nice safe stop above that order block, and then obviously we held all the way down. So really nice entry there. Could have held it further, but I got my profit out. I was pretty happy with that. We then had some kind of mucky price action, and this is very similar to what I think Euro USD has done just right now. So when we're looking at order flow and we're looking at bearish market conditions, remember, it's going to take big moves and it's going to take a lot of money for price to reverse on itself. So this initial pullback isn't enough for me to say that we are overall bullish. What I would need to see is I need to see this move, then another pullback. Okay, and now I've got my second breaker structure, which means I can get into that on a bullish bias. So this initial pullback here, and this is what catches so many traders out, this initial pullback here, all that is just a liquidity grab. That's a complex liquidity grab. If you jump up to the 1 hour time frame or the 2 hour time frame, you can see it really clearly. All that is we've come back up, we've reached EPA, we've taken out some liquidity. If you look at this on the 1 hour time frame, market bias is still clearly bearish, right? We draw out our range, high to our low. We're in premium pricing. So we're now in area that we assume shorts. the problem that we have so much as traders is we get too stuck on the lower time frame. So we see all this price action coming in and we're like, right, well, we've clearly broken 1, 2, 3 levels of liquidity. We've got some, bearish, bullish order flow. So we're now bullish. This is only the lower time frame. We need our higher time frames to sync up with us before we are to assume that they were the other direction. So I didn't get in on any of this, I don't believe. What I waited for is I waited for 15-minute liquidity sweep, which we got here. And then we start to get some bearish breakdown like that. Okay, start to get some impulsive candles, and I just got in here. I added multiple positions to that. I was pretty confident on the trade, and I took all of my profits out down here. Now, this only shows a 1.85, but overall I had 4 positions on this trade, and 4 positions ended up giving me about 2 to 3% out of the marketplace, which when I'm trading 0.25 per position, obviously, it's a really good profit. And then that's one of the things that I'd always recommend as well. Cheers, Anton. That's one of the things I'd always recommend as well. Okay. If you're looking at a setup, and this is how I kind of manage my trades. If you're looking at a setup, okay, so you've got external liquidity sweep like that. Okay. ISC. Okay. Nice clear MSU. Okay. For me, how I will trade this is this. I will enter, if I'm looking at external liquidity sweep, I'll often enter a risk entry, okay, and I'll put 0.25 on there, okay. When I then start to get some bearish confluence, I take another trade and I put another 0.25 on there, okay. Now I'm at a full position. So if my trade, let's say I didn't take that second position and instead price did this, I'm only half risk loss. So my losses are half the risk as a win would be from the outset. Once I get my confirmation, I then have my second position in, because now I've got confirmation and the likelihood of that happening I know is a lot less. Okay. If it does, yes, I lose a full position. That's okay. What I'm then doing is I'm then looking for another position. Now, my next position, it has to be a position in its own right. So it can't just be a random addition. It has to be a position in its own right. So I'll often look to add a third or a fourth position sometimes if it really starts moving, once I then get that next confirmation that the trade is moving. And if it's a particularly big move, what you can obviously do is you can then look to scale into these all the way down until you ultimately hit your profit target. Okay. And this is how I will stack my positions. I think some people call it pyramiding. I don't really care what it's called. What I will then do is I'll just add into the position whenever I get an entry within its own right, meaning that if this is down here, okay, and I've got a potential trade of like 1R, I'm not going to be taking that trade. Okay. But if it's here and I can get 3R out of the trade, then I'm going to enter in on it. So as long as it's a position within its own right, then I would always jump in and take extra positions. But one of the key things that I'd always recommend you guys doing when you're taking your trades is wait for that first position. Okay, take your first position. When you then get confirmation, and that might be a break of structure and then a new setup, you can add in your second position, however you want to do it, and that's up to you. You can add in your second position. So that confirmation then puts me a full risk into the trade. And then obviously when I win on full risk. But if it does happen to lose and it does happen to reject me like that, when I lose, I only lose half risk. And that's how I generally tend to keep my wins twice as much as my longs, as my losses. All right. So hopefully that's a little tweak that you guys can make this week. So yeah, good week all in all in GJ. I'm looking forward to seeing what it does next week. Any questions, guys? Any questions on any of those trades?
No.
No? Okay, cool. Well, I'm going to keep these sessions short and sweet. I'm going to always record them so we can go back through them, but we'll try and do these trade recaps once a week now going forward. We're also going to do some trade analysis as well, so some forecasting once a week as well. And then obviously we've got our classic webinar. So I'm going to really try and start bringing in some more weekly content for you guys, just to kind of give you my thought process, and that should help you guys with your development as well. But look, other than that, guys, enjoy your Sundays. Thanks for
Perfect.
tuning in. All right, and I'll catch you all in the week.
Thank you.
Cheers, guys. Take it
Have a
easy.
good one.
Cheers, mate.
Cheers.
Cheers. Bye bye. Bye bye.